Good morning, YouTube. Monday morning, we're going to get right into the stock charts. Going to go through what I'm seeing, and hopefully you're able to use some of this information in your own analysis. This information in this video is only my opinion, not trading advice. So everything I'm talking about here is literally just what's going on in my own interpretation of the markets. All right, so looks like there's a little bit of a rotation happening in the markets. People are buying up the SPY stocks and they are selling off the tech stocks. And so we see triple Qs is down 1%, a little over 1%, and SPY is pretty much flat. So a little bit of a rotation. But the problem is that the big FANG stocks, the big mega cap FANG stocks have become so heavily weighted in across the board in pretty much everything that if they're selling off, they're nothing else has a chance to rally. So that's why, maybe you see other stocks that are not tech stocks rallying, but the tech stocks selling off just creates too much damage for the general indices. So here's what we got going on. Here's your SPY chart. And we're just, you can see it's not selling off impulsively, just kind of, getting a little bit of a sell-off in the first hour today. We're above this gap right here. We're right near the all-time highs. Seems like the market wants to pop an all-time high or try to. But what I always say is when everyone's watching a level, and right now everyone's watching the all-time highs in the SPY, typically you're going to do one of two things. You're either going to kind of head fake and make it look like you're going to make that level or, hit that level, and then you're going to fall short and move, sell off. Or you're going to overshoot that level. So the level right now, if I mark it out, is right about there. 30, I forget exactly where it's at, but 30, call it 339, somewhere right around there. And we're right there. So if we're either going to probably fall short right here or overshoot that level a little bit, pop up above it, make it seem like we're going to kind of do a move like the NASDAQ, and then we'll have to see what's going on at that point. But typically that's what happens. You either overshoot a level or you fall short. And here's the Qs. So what it looks like right now, if we let's throw out all these lines. I don't think they're useful anymore, as useful. But what we do have is this uptrend right here. And you can see this uptrend is really coming back all the way since April, and it's just this nice, clean uptrend, lots of reactions. We're coming back down to it, you can see. So it looks like we're going to run down and make another tag of this support line, and then we'll have to evaluate what happens. Obviously, if there's a break of support, then there's bigger things happening. And if we hold support, then the uptrend continues. So as of right now, it's weak, but we're showing weakness. You can see selling off on Friday, little kickback rally, continuing the down move. So it looks like we're running down to the support. Gold and some of these miners are starting to look weak. So what I think is going on is the market was anticipating more stimulus, more money printing by Congress, and they haven't got that yet. So now they're going to start throwing a temper tantrum is what it looks like. And so gold looks like it's weak. You can see today they popped it up, but now it's selling off. That move was faded in that initial pop right there. Now it's being sold down. This is gold bullion. If I look at some of these miners here, you can see, and let's find a level here for gold, because gold is in a long-term bull market. So what I think is probably right here. I think about this 1792 is a really clean level to potentially add or establish a gold position. And if it breaks this, then we probably come down to this longer term support line that's right down here. Depending on when we get down there, maybe it's at 1650 or 17. I don't know when it's going to actually hit. But that would be really the last stop. And anything below that is, we'll start to potentially do some damage to the bull market. So that's what I'm looking at. And then you see the gold miners here. Here's Barrick Gold. We go to the daily. Now the day's not over, so obviously take what I'm saying as of right now with a grain of salt. You need to wait for the day to close. But we're starting to break this uptrend line that Barrick's been in. You can see started to chop through it the other day. We did a back test, today, and we're starting to roll over. If I go to the hourly, you can see it a little more clearly. You can see we broke down, started to recover it, and now we're breaking down again. It's just getting choppy, very indecisive action around this support line. To me, that tells me that it's probably going to roll over, start to head lower. Agnico Eagle, this one's still hanging up there. This had a huge ramp, just plateauing up there. So what this looks like to me is what I've heard called the Bart Simpson pattern, but basically it looks like Bart Simpson's head. You get a ramp up, and then you get lots of little moves where it kind of makes his Bart Simpson's hair like that. And then, it's something like that. And then that's followed by an impulsive down move like that. And you can see it's kind of like his head. So I don't know if that's going to play out, but that's a possibility. Until then, it's just holding up there. So it's not bearish up here. It's just something to watch. Gold is starting to fade a little, so this could start to roll over. And I took a short on this one, this PAAS silver. Silver looked weak. Well, silver just it runs a lot farther and faster than gold, so it falls farther. And silver just spiked. It went parabolic. And anytime anything goes parabolic, I pretty much look to fade those moves. And it's all about timing. You just got to wait for the right entry. And so this started to break down on Friday. And as you can see the uptrend line right here. This is going almost all the way back to the March lows. Clean uptrend line right there. And then as you zoom in on the hourly, you can see here's your breakdown. It was an impulsive breakdown too. It came with a gap down. So it gapped down and then sold off. And then we did a back test today. That was today. And then that was rejected and sold off. So looks weak. That's just confirmation that held as resistance and we're still selling off. So we obviously could continue to back test, and maybe that's what this market wants to do, is just continue to do these back tests, or we could roll over. But ultimately, it's in a bearish posture now because we're below this support line. XLV looks like it's just about starting to break the bearish rising wedge. Hasn't quite broke it yet, not impulsively at least, but you can see here is the wedge that it's been in, and as I zoom in, we're just starting to crack it right here. So if this becomes an impulsive sell-off, then that would be your sell signal or trigger basically. It's not impulsive yet, so I don't quite believe it. And obviously this is an hourly chart, so it could be recovered. A break on the daily gives you a little bit more probability that the trade's going to work out. And we're starting to break. So if the daily breaks, then that's obviously further confirmation. And you want to see volume too. A nice sell signal with volume is really the highest probability that you can get. And they're rotating into the Banks XLF. It's not strong, but it's holding the uptrend line. So you can see here the banks are just continuing to walk up support. And, again, today we're up support. So I suspect the dollar is showing a little bit of strength. Let's look here. I haven't looked at the dollar yet. Yeah, you can see the dollar made this double bottom. Here's this double bottom here. And we're just, kind of holding up in this area, So it's holding some strength. Looks like it's bottoming out and possibly going to make a run up to this 95 level. XOK hasn't broken support yet. Here's XOK, the tech sector. Even though the Q's broke, and that's primarily because Amazon, the tech sector has not broke yet. And so you can see just holding this uptrend line. This was your false breakdown. And this ended up being a bear trap right here, at least a short-term bear trap. And then broke up above, coming down, tagged support right here, continuing to hold. So still above support. Nothing bearish on this chart. There's no sell signals either. So that's something to keep an eye on. Even though Q's has broken its trend, the XLK has not. And so that, Q's has not broken its trend. It's coming down into its support. There was a shorter term trend here that it broke, but it's just coming down to support. So in general, tech is still above support. Let me make that all clear so that everyone understands. But it looks like it's going to run down and make a tag of that support line. So I think there's still some downside pressure in tech, and then we'll have to wait and see what happens. Obviously you need to see a break of these big support lines to, for bigger picture trend changes. And this is primarily the reason why tech hasn't broken, is because of Apple. Apple being the largest company in the world, still holding. And you can see it's just holding this support line right here. Started to break it, but it was a whipsaw right there the first couple hours this morning, and they've held support. So Apple's still above this support line. It's been walking up on the upper end of it. So it's just temporarily walking. I think eventually it's going to fall down and fall back within this price channel right here, potentially undercut and fill some of these gaps right here as well. Microsoft broke down. So again, tech hasn't broke, but Microsoft broke its short-term support. You can see you got support here, held it here. Here's your false breakdown. Earnings, they popped it up, and now it's starting to break down. And it looks impulsive too. So that's one of the fangs down, unless they can recover this, which I don't think they can. And you can see the daily breakdown right here. It actually started to break it on Friday, but it wasn't impulsive. Today, it's impulsive. So if it closes down here, then that's one of the fangs has broken down. That sets Microsoft up for a move down to the major support down here. This is Microsoft's bull market, or excuse me, this is not Microsoft's bull market support. Microsoft's bull market support is all the way down here at 90, or depending on when we get there. But you can see as I roll out, there's the 2009 lows. There's a reaction, and we've run way up there. So that's what we're watching in Microsoft. It's broken down. Amazon, let's go to the hourly here. Amazon's still above support. There's your support right here. This is going back to just about the March lows, and we've been walking up this coiling here. You can see it's just kind of coiling up and setting up for the next move. This could be to the upside or it could break down, but until it hasn't broken any support or resistance yet. Here's DraftKings. I pointed this out the other day. It looked like we're in a downtrend now, and it's confirming that again today, down 8, almost 9%. And what I pointed out is we tagged right there at resistance. It looked like a good objective area to short, and from there, pretty much gone straight down. So this one continues to sell off, and this is just one of those high flyer stocks that stay-at-home stock, I guess, is what it would be considered since it's online gambling. And we're starting to see some weakness in some of these stay-at-home tech stocks. Look at Zoom today, down 3, almost 4%. And Zoom is just at support, though. So if I roll out on Zoom, here's your support. This is really the liftoff that took place back in January, and with the stay-at-home stuff. So Zoom ran, really from when it started, it ran all the way up almost 300%. And so now you can see we've built a support trend line right here, and we're coming right down into it right there. So we'll see if this wants to break, but this is a setup, and we're just waiting for a break of the support line. So a break would be your sell signal. Until then, nothing to do, but just wanted to point it out in case it happens sometime soon. Philip Morris, I've been watching this one. We're popping above this resistance again. So this one, if I go to the daily, you can see if I roll out, here's your resistance. This is going back to June of 2017, and this thing's been in a bear market ever since then. starting to roll down. Where was I? And yeah, PM. So this has been in a bear market since 2017. Here's your resistance line. It's just been walking down here. We broke the first breakout right here. Was a false breakout, aka bull trap, and that was followed by a really impulsive selling all the way down to the bottom of the trend line. So that was support, and now we've started to work our way higher. We popped it. We're starting to pop it is the point. It's starting to look like it wants to go and give. So I'm going to watch this to see if we get some sort of an impulsive breakout. And then that would be, your buy trigger, I guess. And that would set this up for, starting a new bull market in this stock. And this is Philip Morris. And we'll wrap up here. Here's Adobe. And Adobe, basically on Friday, I pointed out that I thought that looked like a stop raid. And so far, it's proven to be a stop raid. You can see here that it just briefly popped above this resistance line right here at 456.50 about. And we briefly popped over it. But that was the day, or really the week, last week, where we had a really low volume grind higher in the S&P 500, and it just didn't look, low volume moves are very fadeable. So oftentimes when you get a low volume move in one direction, it can be wiped out really easily, and that's oftentimes what happens. So we saw that kind of grind higher on Adobe, and then sure enough, just sold down, and you can see it's just been kind of flagging down. It sold, flagged out, sold off, starting to bounce a little right here and find a little bit of a base, but ultimately this looks like it's heading lower. Continues to this really does continue to look like the uptrend in Adobe is over. So this was your uptrend going back to March, just a nice steady clean uptrend. We broke the uptrend right here with an impulsive breakdown because it came in the form of a gap. So it gapped down and sold off. We did a back test, and then failed, and then did like a stop rate, kind of another back test basically, and failed. So at this point, should continue to go lower. I don't want to see it back above this 456, 50 area. Yeah, I don't really want to see it back above there. It should continue to go lower from here. I'm looking at taking some profit around 410 or somewhere right around there. That's all I got, guys. So in general, a little bit of weakness today, but nothing to write home about. Trend lines are still intact. The technicals are still intact for the market. So everything's still in an uptrend. We're just looking for signs of a breakdown. So leave a comment below on any stocks you want me to look at. If I forgot something, then just put it back in the comment down below, and I'll try to catch up on that. I do try to cover some of those stocks that you guys put in the comments in the videos. So yeah, leave a comment below, and I'll catch you guys on the next one.